Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 13th of February. US dollar starts the week higher in the aftermath of the Trump-Abe meeting. The US dollar opened with a positive gap on Monday against most of its counterparts and continued to trade higher during the Asian morning in the aftermath of the meeting between US President Trump and Japanese Prime Minister Abe over the weekend. The positive reaction in the greenback may have been due to the absence of any discussion on the issues of currency manipulation or trade policy by the two leaders. What's more, market participants may have been concerned of President Trump taking this opportunity to jawbone the dollar again. With that risk finally out of the way, investors likely breathed a sigh of relief and may have assumed new long positions in the dollar. Dollar yen was one of the currency pairs that opened with a gap up and continued to rally until it hit resistance slightly above the 114 barrier. Then the pair retreated somewhat, but we still believe that the short-term outlook may have turned positive. Considering the recent signals from Trump that he will announce a phenomenal plan on tax reforms within the coming weeks, we maintain the view that speculation regarding fiscal stimulus could keep the greenback broadly supported in coming days. As such, we expect the bulls to regain control soon and push the rate up for another test near 114. A clear break above that obstacle could see scope for extensions towards our next resistance of 114.80. As for the bigger outlook of dollar yen, the recent recovery confirms our view that the slide started early January was just a corrective phase which could be over. However, we prefer to wait for a decisive break above 115.50 before we assume the resumption of the prevailing medium-term uptrend. Now moving to Canada, the Canadian dollar came under renewed buying interest on Friday following the release of the nation's jobs data for January. All the indicators beat their forecasts significantly, with the unemployment rate declining instead of staying unchanged as expected, and the labor force participation rate rising. In our view, these data lower notably the likelihood for the Bank of Canada to take any action in the foreseeable future, something that may keep the Canadian dollar supported for a while. Dollar CAD tumbled to break below the support, now turned into resistance barrier of 131.10, but hit support slightly above 130.50 and rebounded to test the 131.10 zone as a resistance. We believe that sellers may take advantage of that level and drive the battle lower for another test near 130.50. If they prove strong enough to overcome that obstacle, we may see a test near the psychological zone of 130. However, considering our view for both a stronger dollar and a stronger Canadian dollar, we would avoid dollar CAD as a proxy for any further CAD gains. The technical picture agrees with that view, as the pair seems to be trading within a falling wedge formation on the daily chart, something that may keep any further declines limited near the lower bound of the pattern. Instead, Euro-CAD may be a better pair to exploit more strength in the Canadian dollar, especially given the political risks facing the Eurozone, which have started to weigh on the common currency. As for today, during the European day, the economic calendar is very light. The only noteworthy indicator we get is Sweden's unemployment rate for January, though no forecast is available yet. With regards to the speakers, US President Trump will meet Canada's Prime Minister. As for the rest of the week, on Tuesday during the Asian morning, we get China's CPI and PPI data for January. In the US, the main event will be Fed Chair Yellen's semi-annual testimony on monetary policy before the Senate Banking Committee of Congress. She will present the same testimony before the House on Wednesday. Although the testimony will be the same on both occasions, we expect market participants to pay extra attention to the Q&A sessions. From the UK, we get the inflation data for January. On Wednesday, market participants are likely to turn their gaze to Sweden, where the Riksbank will announce its policy decision. considering that since the last gathering, the nation's CPI and CPIF rates for December both surged to reach highs last seen in 2011 and 2012 respectively, we see a very low likelihood for the bank to take action. In the UK, employment data for December are due out. In the US, as we already noted, Fed Chair Yellen will testify before lawmakers, again this time before the House Committee of Financial Services. With regards to the US economic indicators, we get inflation and retail sales data for January. On Thursday, no major events or indicators are coming out. On Friday, we get UK retail sales and Sweden's CPI data, both for January. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.